Trading is a game that 99% of those who try and play end up failing. The reality is that we need to outsmart this game that is called trading. You see, if all of these people are failing, you have to ask yourself why. And I'll tell you why. It's because normal doesn't win the game of trading. Trading requires something completely different to what society has told us that gets success. So in this video, there are 3 rules that I want to share with you on how to actually play this game that is trading and how to actually get the results that you want. The first rule is the mirror. You see, most people who come into the game of trading obsess over the externals, right? The external reality of trading is everything outside of ourselves. It's the strategy. It's the news. It's the market, right? Everything that is outside of us. That is what people obsess over. That is what they think will get them success. The reality, however, I've been in this game now for over 5 years. It took me a while to figure this out, but the reality is that the markets are a mirror. They will mirror who you are. So if you are an impatient person, the market is going to mirror that impatience back to you. You will begin to force trades. The impatient person oftentimes forces the market because they can't wait for their setup. No matter what you try externally, no matter what strategy you use, no matter regarding the news, what the market's doing, who the president is, right? All of these things are irrelevant if you are an impatient person. Because again, it doesn't matter what strategy you have, your impatience will manifest itself in the market, right? And there are countless of these identities that get mirrored to people, right? We have also the type of person who is a hard worker. I've met so many traders that are hard workers. And the reality is that's what society tells us that will achieve success. But like I said, trading is a game not designed for normal. Trading requires something different. So the hard worker mentality, which works in the corporate world, you work your way up. The harder you work, the more you may achieve. This doesn't work in trading because trading, a lot of it, is about patience. So what I often see with the hard worker avatar is this person will actually over trade, right? Over analyze. This person will also force trades. Another thing that I find a lot with this hard worker character is they revenge trade, right? And the thing is the hard worker, the problem that they have is they can't accept that hard work doesn't work in trading. They can't accept that because that's who they are. And they show up to the market with that identity and it ends up ruining them because trading isn't about hard work. Trading is about smart work. You can work hard in your preparation, but when it comes to actually trading, placing trades, managing positions, all of these things, this just requires patience. It's actually the opposite of hard work because I can work for 12 hours, right? 4 hours a day for 3 days, let's say, and achieve absolutely nothing. On the 4th day, maybe I show up and in 30 minutes, I took a trade and made $30,000. For the hard worker, that makes no sense. And so what happens is they take this identity to the market and they start applying it. But that causes them to fall into the traps that many traders struggle with, like revenge trading, forcing trades, over-analyzing, over-trading, all of these pitfalls. And that's because the market is a mirror. It mirrors who you are. There are many of these character archetypes that we all have. And you know what? There's only one archetype, one character who can actually achieve success in the markets. And it took me far too long to actually understand this character and embody that character myself. And I'm going to share that character with you in just a second. The final character that I want to talk about, and again, I could list these characters off for days, but it's the victims, right? I see a lot of victim characters that try to win the game of trading. And the problem the victim has, knowingly or unknowingly, is what they do is they have this real bad problem with blame. So anytime something goes wrong, a trade hits a stop loss and then reverses and goes to their profit. They close a trade early, right? So all of their actions, because what you have to understand is the market is neutral. It's not biased. It's neutral. That's why it's a mirror, because it's going to reflect who you are. When something is neutral, the actual creating force is the self. So what the victim does is the victim takes actions, and every action has a reaction, right? This is just simple cause and effect. The problem, though, is the victim, they take actions, they get reactions, but instead of using this as essentially the opportunity to create change, to grow, to evolve, to be better, they blame. And they look at outside circumstances, and they blame the market, they blame their broker, they blame their mentor, their strategy, right? They blame, institutions who are manipulating their positions, right? They blame. They don't want to look at themselves. And so no matter what strategy the victim has, no matter how good of an analyst they are, they will never be able to grow because of their inability to objectively look at the market and accept that the market is a mirror. It doesn't want to take the information that the market is telling it and use it to grow, which is what is required. And so, like I said, there's one character, one, that wins the game of trading, right? You look at any video game, because again, like I said, life is a video game, trading is a video game. In any game that you play, there are characters, and some characters are simply better than others. Doesn't mean they're better people. It just means they're better suited for what it is that they are currently doing, right? The hard worker may be better in a different environment, but we're talking about the game of trading and how to win this game. And so there's one person, and that person, and it took me a long time to become this person, that person is the operator. You see, the operator is a person that is purely focused on action and reaction. The operator allows the market to tell it what it needs to do. And so the operator becomes obsessed with something called process, right? The job of the operator is to perfect their process. Now, in trading, if there's anything you'll take away, I'm telling you right now, success in trading. Success in trading is this: the ability to follow rules. Success in trading is one's ability to follow their rules. That's it. The first part of trading is finding a plan and making something work. The second part of trading is the ability to follow the rules. And so the operator, instead of focusing on outputs, the externals, instead of focusing on things outside of them, they actually take full accountability as an operator, and they look at everything that's in their control that they can do to become better. And so what the operator does is when he makes a decision, right? So he takes an action, and that action has a reaction. And the operator is able to look at this. I took this action, it got this reaction, and because he's process obsessed, he wants to then understand, okay, well, how did this play out? How did this affect things? What happened as a result of this? And then he's obsessed over looking at those details and correcting them. And what happens is the operator makes continual progress. The operator continually does things go well, he makes mistakes, he looks at his mistakes, and he realizes what happened, and then he makes changes. He does it again, continuously, because his identity is fully focused on how can I operate the best. He's super obsessed with process. And so his actual obsession, and it's weird, like I'm at a point in trading, and because I know this operator so well because I'm an operator, I'm at a point where satisfaction for me is derived off of how well I trade. Now, for many of you at home, you may be thinking like, well, yeah, of course, like, doesn't that make sense? Like, you trade well, you make money. Not necessarily, right? Like, I can trade perfectly. I can trade perfectly my plan and lose money. I might take a perfect trade, management, everything, followed my rules, lost money. You, the victim, the hard worker, these types of personalities, what they do is they look at this outcome, and then the hard worker is like, I've worked too hard to just lose money. I deserve to make something. My actions must mean something. I'm going to make that money back. Problem. The victim, oh no, the market stopped me out. The strategy doesn't work, right? The victim, no accountability. The operator, I look at this and I say, perfect, because this doesn't exist. What exists is my ability to follow my plan, because I know that my plan makes money over the long term. Again, additionally, flip it. Let's say I trade my plan horribly wrong, right? Wrong trade. I make mistakes and I make money, right? I might take a trade that I shouldn't have taken. I might have taken an action. I should have closed the trade, but I didn't close the trade. It stayed open. And because of that, I ended up making $5,000. Now, for many of you at home, if you made a mistake and made $5,000, you might be very happy about that. For me, no. For me, that is extremely irritating and annoying, because I know that my long-term success in trading is about my ability to follow the rules. Because today I made a mistake and I made $5,000. Tomorrow I make a mistake, I lose money. The next day I make a mistake, I lose money. If I keep making mistakes, I've lost my edge. Because in trading, your edge is your probability of making money over an extended period of time. I care not about what happens on one trade. I care about what happens on 100 trades. That for me is real trading. And again, we're here to win the game of trading, right? Winning the game of trading isn't about making money this month, because a lot of people, and I know many people, right? They might make money one month and then the next month they give it all away. Like, how many traders, maybe you've experienced this yourself, you made money at some point and everything was great, but then you ended up losing it all and then just giving it back. Like, is that the goal? No, the goal is to consistently make money over an extended period of time, year after year, month after month. That is success in trading. That is the game. Many traders can be profitable over a 90-day period. They might make money, but at some point, if they haven't truly mastered the game, they're going to end up giving that money back. And so, was it even worth it? What was the point? And so again, the game of trading is long-term consistency. And if you don't care about long-term consistency, if you're just here to get rich quick and make a quick buck and then leave, well, the harsh reality is you should probably just leave now, because it's not going to happen. You're just wasting your time. Go and try something else. So the first principle and the first rule of the game is understanding that the markets are a mirror and they're going to mirror back to you who you are. The second principle that I want to share with you, this is the holy trinity of trading. This is a cheat code to win the game of trading. This is it, right? Like, this is how you win. So there are 3 dimensions. And again, something you should understand is the triangle is the strongest structure in the entire world. A triangle is more stable than any other shape in the world, right? That's why they have the Holy Trinity. So the Holy Trinity of trading comes in 3 pillars. Number 1, you have strategy, right? Now, this obviously goes without saying. If you want to win the game of trading, you have to have a profitable strategy. But profitable strategy alone isn't going to make you money in the long term. It's definitely not going to win you the game of trading. I could give 2 people the exact same strategy, proven to be profitable, and I can guarantee you, I've tried this many times. If you give me 3 months with them, their results will be drastically different. Same strategy, different people, drastically different results, because the markets are a mirror. So obviously, I don't care if you're a Buddhist monk with the ultimate level of neutrality and self-control. If you don't have a profitable strategy, you're never going to win the game of trading. But strategy alone isn't everything, but it's important. So let's break strategy down, right? What is a trading strategy? Now, for many people, they just think that it's just a plan, right? They think that trading strategy is just a plan. There's a couple of different things. I use market structure, I use liquidity, supply and demand, but it's deeper than that. It has to be properly constructed and tested because it has to produce what we refer to as an edge. Strategy isn't necessarily an edge. Strategy is just a combination of concepts. An edge is a combination of concepts in a way that's formulated as a plan that has a statistical probability of winning the game of trading. That means that this strategy, if applied correctly, will make money. You can have many losing strategies. You can't have a losing edge because an edge becomes an edge once it's proven to be profitable. So you need to figure out how to build your strategy and then how to turn that strategy into something that actually has an edge. And a very simple way that you can do that is step number one, you need to have core concepts, right? Core concepts are your base. That's your foundation. That's how you see the market. For me, I use, as you probably already know, structure, supply and demand, liquidity. Those are my core concepts. That's my foundation. That's how I see the market. When the market prints, I see it through the lens of structure, liquidity, supply and demand. Now, just because I have those concepts doesn't mean I make money. There are many people out there who understand market structure, who understand liquidity, who understand supply and demand. Doesn't mean they make money, and it definitely doesn't mean that they have an edge. So you need core concepts, but then step two, you need to formulate them into a plan, right? You need to organize them because just understanding market structure isn't gonna essentially put everything step by step into a plan on how you execute a trade. So you need to take this and you need to ask yourself, from every decision that I make, from the moment I get to the charts to the moment I leave, every decision I made, every action I took, why did I take it? There has to be a reason. And every one of those actions should be planned. Everything should be logic. If this, then that. That's the framework. If this happens, then I do this. If this happens, then I look at this. And it should be something like you have a plan like this, right? So you have step number one. If this happens, then I'll move over to step number two. And if I get to step number two and this happens, then I move to three. All the way until eventually you get into a trade, you manage the trade, and you get out and you either make money or lose money. But every single decision, from whether you're expecting lower prices or higher prices, where you're looking to get into the market, how you get in the market, how you manage the position, how you close the position, do you take profits, do you take stop loss, how do you manage that process? Every single step, decision, action is part of your plan. That needs to be formulated into a step-by-step plan. The third thing is testing, right? You need to prove that your edge works because just having a plan won't make you profitable. Many traders, maybe even you yourself, you have a trading plan. You trade your trading plan, but you don't know if it's profitable. You haven't tested it on historical data. Maybe it's profitable, maybe it isn't profitable. The problem though is that if you're taking a trade, and please let this be known, every single trade that you take that isn't because you're following a plan that is proven profitable, you're gambling. Every single trade. It's a gamble because you don't actually know what the expected outcome of that trade, if taken 100 times, is. And so you're gambling. And I'm telling you right now, just like the casino, the absolute sure way to lose the game of trading is to gamble. When people go to the casino, and this is kind of how I'll explain what an edge is to you as well. When people go to the casino has its own edge. When you pull a slot machine, inside of that slot machine, there is an algorithm, a system that says if $1 goes into this slot machine every single time and 100 games are played, so 100 times the lever gets pulled, each time the risk is $1. There's an algorithm inside of that slot machine that says for every $100 that is bet on this machine, they pay out $80, right? That is the code, the algorithm inside of it. So it doesn't matter if you go there on one day and you bet $1 and you spin it 5 times and you make $25, you think you outsmarted the casino. You didn't, you just got lucky. If you spend enough time there, the casino's edge will play out against you and you'll lose money. That is essentially gambling. And so essentially the principle that we want to have, right, is like, for me, I'm a firm believer in, why would I want to give my money to the casino? I would rather be the casino because I know I will make money. I don't want to go to Vegas and gamble my money because there's a probability is that I will lose money. I would rather be the place that people go to gamble money because I know I will win money. At the end of the day, the job is to make money. So you have to know that your strategy is profitable, because if you don't, just go to Vegas. You should not be taking a trade. If there's anything you can take from this video, if you right now are trading prop firm, personal capital, whatever it is, you're taking challenges, prop firm industry will hate me for this because this is how they make money on you. But if you are trading right now and you don't have a proven profitable trading strategy, stop what you're doing and go and figure this out. Because if you don't, you're just wasting money. You're wasting time and money. Because in order to win the game, you must have an edge. So you have your core concepts, you have your plan, and now you need to go and test that plan. In that process, you need to go historical data, take the trades that align with your plan. After the period's ended, a year, let's say, you've taken 100 trades, 150 trades, look at the data. Okay, did I make money or did I lose money? If you made money, you have an edge. If you lost money, you don't have an edge. Then you can also refine and upgrade and kind of maximize that edge by changing things, but that's a little bit more advanced. What you need to do is you just need to test. Once you've tested, like I said, you can refine to optimize, and if you do this, now you have an edge. If you can end a year's worth of price action, a year's worth of historical data by following a step-by-step plan, and you weren't trading, you were just trading the plan, not the market, and you made money at the end of that period, now you have an edge. Now you can begin to make money. But like I said, the strategy, right, the edge is only the tip of the triangle. There are two more important things that you must have. Too many traders out there have an edge and still lose money. The second, the bottom right, and what I want you to kind of look at this as, we have the bottom left down here, which is the number 3, and the bottom right here. So this right here is the right side. So you can think of that as the right brain. This right here is the left side. And so you can think of that as the left brain. For those of you who probably already know, your right brain is more responsible for your emotional reasoning, and your left brain is more responsible for your logic, your decision-making process, right? So on the bottom right at number 2, think of the right brain, we have something called EQ. EQ is emotional intelligence, because it's not enough to have a trading strategy, you must have emotional intelligence. Because the biggest mistake that traders make, especially when they're trying to outsmart the game of trading, the market knows that just because you have a strategy, you won't make money. You also need to have an emotional edge, which is your EQ. Why EQ is so important is because your ability to win the game of trading isn't just about strategy, it's about your ability to follow that strategy. Again, back to what I said, your ability to follow your trading strategy is the predicator of your success. And so this is kind of what I want you to visualize. There is something called a performance gap. Performance gap, very simply put, is the difference between your strategy's results in backtesting and your results trading that strategy live. This is what happens to 99% of traders. They have a trading strategy that is proven to be profitable. They know that if they trade this perfectly for an entire year, they are going to make, let's say, 70% profit for that year, right? That's their theoretical results. But when they come to trading that strategy in the live market, maybe they only capture a small portion of it. Maybe they capture, 20% returns. Or maybe in some cases, I see this way too often, unfortunately, is that there are also traders that even though they have a profitable strategy, they still lose money. And that's more common. The losing money, even when you have a winning strategy, is more common than the person who doesn't make as much money that the strategy can produce. And the reason that this performance gap occurs is because of lack of emotional intelligence. Think of emotional intelligence as your ability to control yourself. The problem is that you can have a profitable strategy, but in the moment when there's a trade that's set up and it meets all of your criteria, you have a decision to make. Either you follow your plan and you take that trade, or you don't take that trade. a lot of people, even though that is in front of them and they really want to take it, what happens is their emotional mind takes over because they don't have the emotional intelligence to control it. The emotional mind takes over and it hijacks their decision-making process. And what happens is they get hijacked and now they can't do what they know they should do. They can't do it because in our brain, we have many different areas of our brain, but there's a little area just behind the stem in here, and that's called the amygdala. The amygdala is responsible for your emotional decision-making. So what happens when that opportunity sets itself up? The information from the markets goes to your brain. And where it should be going is here, which is the prefrontal cortex, the decision maker. It goes first to the amygdala. That's because of our biological wiring. What happens then is the amygdala has a choice. The amygdala can activate your fight or flight response system, and your nervous system goes into overdrive and you start to get anxiety, right? If you've traded ever, you know what I'm talking about. That anxiety, oftentimes in the hijacking process, causes you to deviate from taking that trade. So it shows up in front of you. You could take the trade, but then you start to try to justify reasons as to why you shouldn't take the trade because you start to get scared. What if I lose the trade? Right? But there's these highs up here that maybe price will go there. So therefore, I'm going to not take this trade. That's what happens. Take it one step further. Maybe you do take the trade because taking the trade is the easiest part. The most difficult part is actually the management of that trade. Because what happens to all traders is they get inside of a position, right? So price is moving in a direction. They're selling from here. They get into their position. Price starts moving for them in profit. They feel amazing, elated, great. They look at their phone, they're up $3,000. And then all of a sudden, the market starts reversing and coming back to their entry. And all of a sudden, $3,000 goes to $2,500, to $2,000, to $1,600. And at this moment in time, your amygdala, if you don't have the proper emotional intelligence, your amygdala starts screaming, close the position, take your profits, you're gonna lose money. Trust me, trust me, trust me. And before you know it, before you could even process it and say, that's not part of my trading plan. I did this 100 times in backtesting. Sometimes it comes back up and then goes back down. But you don't have the ability in that moment to do that. And so you close your position right here. And you make money, right? Maybe you end up making $1,500. But that trade should have made you $15,000. Or it should have made you $10,000, and you only capitalized on $1,500 of it. The problem is if you do this enough times, at some point in time, the way trading works, the reason it's an edge is because we take trades. So let's say we take 10 trades, right? Let's say we lose 6 trades and we win 4 trades. That means that you have a 40% win rate, which can be a great win rate. My win rate personally is around 40%, 42%. Here's the catch. When you lose a trade, you lose 1%, right? If you have a $100,000 account, that 1% is $1,000. When you win a trade, you win 5%, which is $5,000. So you take 10 trades, you lose 6, so you lose $6,000, but you win 4. And every time you win, you make 5. So you actually make $20,000 on these trades. And if you do the math, the net profit is $14,000. So you lost more trades than you won, completely fine. You still made money. The problem though, is if you start doing this, when your one winner, which should have been $5,000, is now all of a sudden $1,500. Let's run the same math with that example. Now let's say you take the same 10 trades, you win 4. So when you win 4, you make $1,500 on each trade, right? So you make $6,000 and you lose 6 trades. And so you lose $6,000. Well, now you've taken 10 trades and you are break even. You've made no money. That's what happens when you deviate from your plan. That's a positive example of deviation. Another example, and what most traders actually do, is quite the opposite, because a lot of the times traders will hold on to their losses, or they will ultimately close in a loss and try to make it a smaller loss, right? Another example of what so many traders do is they should be taking a trade. They should be selling from this level. Price comes in, their stop loss is here. If this level gets hit, they will lose $1,000. Price comes up, especially people that use manual stop losses, price comes up, now you need to close that position. You should close that position. Your trade idea is finished. Some people just can't bring themselves to accept the loss because in their mind, because of their lack of EQ, they know they should close this trade and move to the next one because they understand that if I take 100 trades, I'll make money. But what happens, they get attached to this one trade and price goes up and they should close the trade. They know they should close the trade, but in the back of their mind, their amygdala says, it could come back. It only has to come back a little bit. I'll close it, but just wait for it to get back to my entry and I'll close it at break even. And I won't win and I won't lose. I promise I'll close it. And it keeps going and going and going. And your $1,000 loss turns into a $3,000 loss, right? This happens all the time to traders. And the problem is the moment you do this, you've lost your edge because you're not trading the markets. You're trading your own limitations. We're back to the mirror principle. You are trading your emotions. You're reflecting your emotions onto the markets and they're giving it back to you because you're making the decisions that don't align with your plan. That's called deviation. And so that's why the second thing of the Holy Trinity is emotional intelligence. And emotional intelligence can really be summed up by your ability to control your actions and follow your plan so that you can ultimately avoid the performance gap. Because the performance gap is what kills most traders. You know how many traders give up? At some point in time, they think in their head, logically, that if I find a profitable trading strategy, if I just find a strategy that works, then I'll make money. That's the end game. For them, the game of trading is defined as, okay, the goal, the objective of the game, find a profitable strategy. Okay, great, but the actual objective of the game is to make money. And so there's a disconnect because strategy is only one of the 3-part series of the Holy Trinity that you can't have one without the other. Like I said, I don't care if you're a Buddhist monk and you have the best emotional intelligence ever, you follow your plan 100%. If your plan doesn't have an edge, if your strategy isn't profitable, you will also lose money. So if you have a strategy, you also must have emotional intelligence. This takes me on to the third, which is our left brain. This is our CEO, our decision maker. This is where things really become under control. We can start properly operating, right? This is the operator. And the operator, and the number 3, is what I call a trading OS. And OS stands for operating system. An operating system. Every operator needs an operating system. That's the place they operate from. So your operating system, and what's so powerful about this operating system is this is the area that you control everything, right? It's the control point of everything that's going on. It's where you analyze your data. You analyze the trades that you've taken. You understand how you performed, right? This is where you review your performance. And this is where all the growth happens. Because a lot of people, they'll take a trade, they'll lose money on that trade, and they don't then go journal that trade, review everything. Why did I go wrong? Why did I sabotage? What happens is they lose the trade, they put it away, they go away, they come back and say, okay, I'm not gonna do that again. But did you ever think to ask yourself, what won't happen again? What did I do? Why did I do it? That's where the growth is. And that's why the operating system is so important, because inside of your operating system exists everything that you've done. And what you do with your left brain, with your actual logic, you can go into your operating system, look at every trade you've taken, why you took those trades, the outcomes of those trades, the mistakes you made. And then you can take all that information and then you can start the review process. And this is very, very important. Your review process, because now every week, every month, and every quarter, I go into my operating system, I look at all the trades that I've taken, and I understand how well did I follow my plan. I don't look only at how much money I made. I say, how well did I follow my plan? Because I know that's the most important part. That's the highest predictor of my success or failure. That's the highest predictor of whether or not I win this game of trading. And to be clear, winning the game of trading is simply staying alive. It's a survival game. It's how long can I play? That's the definition of success. So the operating system, extremely important. Everybody needs an operating system. And this holy trinity right here, this is exactly what I do for my clients, right? I come in and I instill a strategy. I give step-by-step strategies with trading plans, with concepts, proven that it works. I back test it. I show you hours upon hours upon hours of me back testing that strategy so that you know it works. I don't have just one strategy, I have multiple strategies. I give you a proven profitable strategy. Some of you right now may be struggling, you can't find a strategy. Maybe that's your problem. That's exactly what I solve for my clients. The other thing, emotional intelligence, right? Maybe you have a strategy already. Maybe you want a better one, but you have one already and your problem is that you can't follow your strategy. Well, emotional intelligence, right? You need to solve this. That's exactly what I solve for my clients. And the way that I solve it is I have a 27 module program specifically only for this. 27 videos where I break down every layer of what makes us human, really, our brain, our mind, why we do what we do, how to do things differently, how to spot patterns, how to self-reflect, the biological wiring of what it means to be human, how to change your mind to think like a trader. Like I said to you, normal will never win the game of trading. And so this program that I have, it essentially takes people from normal to trader. And that is what emotional intelligence is all about. You have to really change your own operating system. You have an external operating system, which is the thing that we use. We also have an internal operating system, which is our emotional intelligence, which is the mirror. Who we are, what we reflect, the market will be shown back to us. That's our internal operating system. So strategy, emotional intelligence, and then of course, operating system. This is again what I show my clients, right? Because I just run the operating system that I personally use. So the system that tracks all trades, how to use it, how to review everything, how to build an edge, everything inside of my operating system. This is exactly what I give. And that's why I have the success rate of students that I have. I have countless students that have gone on to get multiple six figures, even seven figures in funding, make tens of thousands, hundreds of thousands of dollars across my students, right? One student alone made over $90,000 in a single payout. Why? Because this is all it is, right? This is the game of trading. Again, like I said, this is what I do for my clients. If you want me and my team to come and do this for you, show you how to do it, the link in the description, you can check that out and see whether or not what we do have is what you're looking for. If you think that we can help you win the game, you're more than welcome to check it out. The third and final, and arguably even the most important principle, is that you have to have fun. Who plays video games that they don't enjoy? If you play a game, you buy a game, you don't like it, you change it. You don't keep playing games that you don't like. And so as much as it's counterintuitive and some people will tell you like you don't need to enjoy it and whatnot, I'm telling you, you have to find this thing enjoyable or have to find a way to make it enjoyable, because it's only when you actually enjoy doing it and you can actually have fun from the process. Of course there are ups, of course there are downs. Same with the video games. Some video games you play, it gets really frustrating when you lose, but overall you're having fun. You're enjoying the process. You want to do more of it. You have to have that. If you don't have that, you're not going to do the work. And so this is why I say maybe it's arguably one of the most important things. Because if you don't enjoy it, you won't sustain long enough to keep playing. Doing all of this requires work. And the only way that you will do that is if you actually derive some sense of satisfaction from what it is that you're doing. Because regardless of how much you want the end result of trading, which is money, financial freedom, location freedom, time freedom, right? You want the freedom. That's what a lot of people want. You want the freedom that trading delivers to you. And when I first started trading, that is all I cared about. I just cared about what I could get from it. But the longer I stayed in the game, the more I started to enjoy it. And it was the process when I was able to become the operator was because I really derived enjoyment out of it. Like I just said to you, for me now, as weird and borderline psycho as it may sound, I derive my pleasure from operating just as much as I derive my pleasure from making money. But if doing all of this is really painful, eventually you'll quit, you'll give up, you'll take breaks, right? Maybe you've already done it yourself. And so the reality is sometimes, right, if you're at a point right now and you are trading and it isn't fun, that doesn't necessarily mean that it can't be fun, because there were times in my trading career where it just wasn't fun at all. It was dark, it was depressive, I wasn't making progress, I was lost, I was confused. It wasn't fun at all. So if you're at that point, that doesn't necessarily mean that you have to give up. It just means you have to find a way to enjoy it. And for me personally, again, personal experience, I started to derive enjoyment, satisfaction, and fun from trading when I actually understood what I need to do. Because if you play a video game and you don't even understand the objective of the game or how to do it, let's say you're in a game and the objective of the game is to find treasure, but there's no map. There's just an infinite amount of space where you have to find this treasure. You have no idea how to find it, no idea how to get clues, no idea how to make progress. You're kind of just wasting time, feeling like you're running around in circles and not doing anything productive. That's when it becomes draining. And so as long as you take this framework, right, the trilogy framework, as long as you take this, and regardless of whether you do it with me or my team, or whether you go and figure it out on your own, this should re-spark some fun. Because now you know what you're doing. Now you know how to make progress. And that progress is the part that is fun. Same as a video game. The most fun is the leveling up. And so my objective here is to give you this system and these principles so hopefully you can genuinely win the game of trading. And hopefully in the process, you actually find enjoyment out of it.